What's up, everybody? This is Jimmy with Trading Decoded, and today we are going to discuss the ORB strategy. ORB stands for Opening Range Breakout. Now, the reason I'm making this video is because I'm getting asked a lot by it because some of the members in our community use this strategy, but they use it in different ways. So I'm looking to do two things with this video. Number one, to define what the ORB actually is versus what people are thinking it is. And number two, how to use it to make some money. Okay. So let me also say that the ORB strategy has a 42 to a 45% success rate traditionally. There are only two variables that you need to consider when playing the ORB. Number one is how long of a range or time limit do you want to give for the range to be made? And I'll explain that when we open the chart. And number two, where your profit target's going to be. Everything else is set in stone, okay? Your support, your resistance, because this strategy is based solely on a support and resistance schedule type thing, and your profit target, okay? So I'm going to show you how the traditional way of playing an ORB strategy works. Let's go ahead and launch the chart. I'm going to use SPY. This can be used on any ticker, okay? Any ticker you want. Now, I trade 1 minute charts. The ORB strategy works on any time frame, okay? But what's important is not pre-market, not yesterday's information, but how long you're going to allow the range that the ticker trades within to take place. Most people traditionally use a 15 to 30 minute time frame. Okay, so I have my chart set at a 1 minute chart. I'm going to go ahead and put a line at the 30-minute candle. Now, what we're looking to do is find the high and the low that was put in within those first 30 minutes of the day. Okay, so I'm going to go ahead and make a line here. And I'm going to make a line here. Now, that is your opening range. That's what that's called. And if you just understand the meaning of the words that make up the strategy, opening range, okay? That is the range that the ticker traded within for a specific amount of time, since the open to whatever you use for your time frame. Okay? Now, another thing I would implement on here is an EMA line. Now, I have mine set to be an EMA, but a 9. Some people will use a 20, and some people will use a 34. That is a personal preference, but let me go ahead and tell you how the strategy works, okay? So you find your range. We got the high of the day, and we've got the low of the day that's put in the first 30 minutes. Technically, you want to find or try and find whether the ticker is navigating or gravitating to the upside or to the downside. Now, today was perfect because it went up and it went down and then it went back up again. So we really don't know what the trend is yet, okay? And that's where this really shines, okay? So we have our resistance, we have our support. We are moving within those ranges, okay? We are sitting on our hands until we get outside of one of those ranges. If it's to the bottom, we would be playing puts. If it's through the top, we would be playing calls. But here's the thing, and this is what people need to understand. Just like how I teach support and resistance entries and exits, the same rules apply here, okay? So yes, we break through, but we are looking for a retest of that support to act as resistance. If it fails the retest and it goes back in, we don't take an entry. If it comes back through, retests, which it did here, and failed to break through, we take our entry. Now, this is where the EMA line comes into play. Not only will it show you the trend direction, obviously we are moving down at this point. If you can't see the candles, I mean, it's obvious, but the blue line is also telling you we're moving down. But where a lot of people will take profits, myself included, would be we get down, and the minute we close above that EMA line, we get out of the trade. So it's not perfect. We gave up a little bit of money, and again, it came back down a little bit lower later, just a few minutes later. But this is not one of those strategies that you hold and hope. However, another thing you got to watch out for is the people who are playing, I guess would be more aggressive. You're trying to squeeze more out of it than what you should. Some people will hold on to this trade and only get out of it if it breaks back into the range. The problem with that is you're dealing with theta. Okay, now theta is going to be eating away at the value of your contract the whole time. So even though we stayed, except for this point here, below the range, we traded sideways. You would have lost entirely if you would have held through all that. So it's important to know when to take your profits, whether it's when you start to hit a support below the range or whether you get through an EMA. However you determine to do that is totally up to you. But what I needed to clear up is to explain to people what the opening range breakout actually means. Okay, has nothing to do with pre-market, has nothing to do with yesterday. And we'll go ahead, since we're here, and we'll plot the previous day on SPY. Okay, so we'll find our 30 minutes, which is right here. We'll draw our line. We'll get our high of day, our low of day, and where would our entry be? Well, we break out here, we come back to retest, we fall back into it. We break out here, fail to retest, come back into it. But we get out here, we come down, we retest, it stays above. You could have ridden that one and made a killing. Now, this is the one downside to using the EMA, okay? Obviously, you would have been out here if you're following the EMA rule. And that's why some people change this value to be more loose, because you would have gotten more of the play. And some people even still will go all the way up to 34 that I've seen. And as you can see in this case, it wouldn't have worked out better. I prefer a tighter one, but listen, I mean, if you could tell that we're trending up and you're green this whole time, you might just choose to ignore the EMA altogether. Okay, once you get this far away from your entry, you're in the money, good amount of money. So you have the ability to let this play out a little bit. You know, I would just have an exit that if we come down to a certain point that you would definitely get out. And me being a support and resistance trader would have been right here because I would have had a support line drawn here. So I would say, all right, I'm in the profits here. We tried to come down. We failed to come down. We're putting in higher lows, which means we're trending up anyway. But if I was ignoring this EMA or if it wasn't there, that would be my absolute get out of this trade moment. Okay. So it's really up to you guys how you want to play that. I play tighter because I'm more of a scalper / quick trader. I don't like to hold on to trades for long at all, unless it's a nice, easy trending day. Okay. But that is what the ORB really is. And that's how it is traditionally used as a trading strategy. There's no difficult things about it. Okay. You just have to have the patience to wait for the breakout, wait for the retest, and get in. And it works 42 to 45% of the time. Okay. So that's it. That's all I wanted to say. If you got something out of this video, please give me a like. If you'd like to subscribe and share this, I would appreciate it. Go ahead and hit the bell notification. Also, if you'd like to learn about what we do day-to-day trading SPY, feel free to join the Discord. I have a link down below. And if you'd like to support my ability to possibly do this for a living and train people in real time as the market is trading, you can become a patron of mine and help make that happen. I'd really appreciate that also. Outside of that, I'm going to go ahead and wrap this up. I hope you guys are having a great weekend. I will talk to you soon. I love you all. See ya.